Hey friends, thanks for hanging out. I hope you're doing all right today. I'm having a really down on capitalism day, and I just saw the one other organization in the entire world of cryptocurrency that's supposed to be about supporting women doing some stuff that could be actively harmful for women in order to make money. And I was like so upset and angry about it that I was just watching. First I meditated and then I was like watching a bunch of Mean Girls bloopers to try and make myself feel better. So I hope you're having a better day than I am. I'm Rachel. That brings me to the purpose of doing these talks at all, which is that I'm working to use the tools that we have now, blockchain technology, which underpins cryptocurrency, so that society can transcend the trappings of zero sum extractive late stage capitalism. And we can do it now, but there's been a lot of that old energy coming into the cryptocurrency space. And so it's scared off a lot of the people who would most resonate with the power of the technology to transcend that old system. So I'm trying to reach the people who recognize that and may not know about this yet. I'm the founder of Seeds, which is like cryptocurrency mutual aid. It's helped people in 30 countries and counting. And so when I'm doing these talks, I'm also working to raise awareness for Seeds. So if it resonates and if you get some value out of this, consider helping someone in need through Seeds at the link in the description. You'll also get Seeds cryptocurrency and thanks because we think in a better system. It makes sense to actually give people a way to build wealth because they helped people in need, right? So that's what Seeds does. And it's working to build a bigger pie for everybody involved through doing that. We also have a course. I'm going to jump in real quick and show you this. So you can check this out. We only have 20 spots available at this time. We're trying a different sort of experiment because we have this important milestone coming up, and it could happen as soon as late June. So 2 weeks from the time I'm recording this. And we want more people to be ready when this particular product starts trading, the Ether ETF, which I'm going to talk about today. If you'd like to be a part of the course, the link for that is also in our description. And it's effectively free because you get Seeds cryptocurrency and thanks when you join the course. And it supports Seeds so that Seeds can make sure 100% of the value of gifts that come through our system go to people in need. So it supports a good cause. Can learn a lot from it. I used to be a pro stock trader, started buying Bitcoin in 2013. I'll talk more about that. So I bring all that expertise or whatever into the value that I try to share with you through the course. So if it resonates, please totally do it. Please don't hesitate because for real, y'all, like now is a really special, interesting, unprecedented time in the world of cryptocurrency. And we need more good, giving, generous people who are working to benefit the world to benefit from those opportunities instead of more of the same old gross energy that is just about like greed and selfishness and whatever, which has been the story of capitalism, for centuries, if not longer. We need to shift away from that. And so that's what I'm working to do. And I'm hopeful that that's going to connect with people who understand and resonate with that message. That's what we're trying to do today. All right, I'm going to show you just a few slides or whatever to like further introduce myself if we don't know one another. So, if you've ever heard of or seen the HBO show Silicon Valley, this is like a scene from the end of the first season where they're competing in this contest called TechCrunch Disrupt Battlefield, which is like a real thing. And this is me competing in the real life version of that on behalf of Seeds. So I'm sharing that because Seeds went through all like the quote unquote fancy tech things, or at least most of them. And it just made me even more disenchanted about big tech and about the fact that capitalism powers technology through what are called venture capitalists, VC, who invest in tech. And a lot of people don't know this, so it isn't talked about, but it's a very small group of people. They're almost all male, almost all white male. They're concentrated in Silicon Valley, and 98.1% of the investment they make goes to men. And that has a huge influence on every piece of technology that we're using today. And it's really problematic. And Seeds is working to transcend that too. My hope is that at scale, Seeds can be so broad and affect so many people that VC becomes obsolete. People would just use Seeds to get the funds they need instead, because you can also redeem a seed in order to ask for the money you need and receive it as a gift from the community. And then everyone who gives to your need receives Seeds cryptocurrency and thanks. And that's how, it's building a bigger pie for everyone involved over time. If and when the cryptocurrency market goes up in value, helping someone through seeds can mean that you have much greater profits. And there's no other ecosystem out there that's like that, to my knowledge. So before I founded Seeds, I was a career profitable professional stock trader, mostly in Chicago and also briefly on Wall Street. And then I quit because I realized just how weird it was and how misogynistic it was. And I started buying Bitcoin in 2013 when it was at about $90 a coin. And here are some receipts from that time. So I brought in, the skills that I had honed as a professional stock trader, and I kind of swooped in and scooped some up when the price had dropped because I thought the fundamentals were there and it looked like a good trade. And within a few months, it was at $1,100. And I mean, if you haven't kept an eye on it recently, it hit all-time highs in March of 2024 of nearly $74,000 a coin. The thing that was like most significant about this though was that over time I realized like this is so exciting because the technology on which Bitcoin rests, which Bitcoin pioneered, I realized it had the potential to actually transcend the discrimination that I had seen and experienced firsthand in the old economic system. We could rebuild things in a new, more democratic, decentralized fashion. So we could get away from the old system in which, it's like this handful of gatekeepers who are controlling the flow of money, while so many people are left in scarcity energy and like forced to trade our time for money. And we have to live in, like, pay a subscription in order to live inside a house. The old system just doesn't work and it keeps a lot of people in lack. And I understood that this technology that had been introduced with the founding of Bitcoin in 2009 made it possible for us to reimagine these systems and rebuild them from the ground up. And that led me both to trading cryptocurrency and also to founding Seeds, our crypto mutual aid project, which again is about building abundance for givers through helping others. It builds a bigger pie for everybody who's involved in the ecosystem because people give. Okay, so if we're speaking about this particular moment in time, I think I already mentioned that it's special and unprecedented. So let's take a look at why that's actually the case, all right? If you've missed it, the big event, it was a huge deal actually, was that an Ether ETF was approved in the United States on May 23rd. So let's take a quick look at that. Let me pull up just so you can see it. So you don't have to just take my word for it. So this article from CNBC talks about the Ether ETF's approval on May 23rd. This was like a huge surprise to virtually everyone in the cryptocurrency sector. What it means is that essentially like a stock form of Ether is now going to be available for trade on the conventional markets, in the conventional stock market. So people who were comfortable investing in the stock market but hadn't felt like they could get involved in cryptocurrency now have this sort of familiar vehicle to use in order to gain exposure in Ether. So it's virtually certain that this is going to mean that a lot more people are buying this stock form of Ether effectively. And that's going to drive market prices up, and Ether could go up a ton in price. And we have some precedent for this in that a Bitcoin ETF was approved in the United States in January. But the difference was that because nobody thought this Ether ETF was going to get approved, once it was approved, it was like this big surprise, but the exchanges who were going to launch the product weren't ready. When Bitcoin's ETF was approved back in January, they thought it was going to happen, so they were ready. So trade actually launched the following day, January 11th. That hasn't happened for Ether yet. We're kind of in this nebulous period where like the approval has happened. We know that they're working to get things set up so that this product can start trading, but trade in the Ether ETF has not yet launched. So we have time to get ready for what looks like Bitcoin. I'll show you the Bitcoin graph so we can take a look at that, for what is likely to be a surge in price as a result of this. So, excuse me, like if we take a look at these graphs, I'm using Gemini Active Trader here. That's the platform that I'm looking at. It's a centralized exchange. If we take a look at this and we see what's up with Bitcoin, let me also quickly show you when the Bitcoin ETF was approved. Okay, So again, so you don't have to take my word for it, we can see that the Bitcoin ETF was approved on January 10th of this year. And this is like harder to find for some reason, but trade started the following day. You could Google this as well. I'm sorry I didn't have this prepared, but yeah, okay, we can see it here with this article. On January 11th, Bitcoin ETFs began trading on US exchanges. Okay, so it was the day following the approval. So if we look at the actual effect on Bitcoin, the cryptocurrency's price, this is the cryptocurrency. This is not the ETF that we're looking at here. And I don't think it's necessary for us to get into the technical specifics regarding the difference between an ETF and the cryptocurrency itself. Just know that it means that there's a likelihood that this is going to drive cryptocurrency prices up in terms of like every product that's available. Okay. So if we're looking at the Bitcoin price, we can see that this is the day graph. So we're looking at data intervals posting each day. Let's zoom out a bit so we can check out the price a little further back. Let's actually pop this out. Okay. So I want to find January 11th when trade started. All right. So here's the 10th, January 10th, which was again the day that the Bitcoin ETF was approved in the United States. Here is the 11th. So you can see that there was a little bit of a spike in price heading up to the approval, and then the price dropped. So what this tells me in looking at this graph is that there's this adage that maybe you've heard regarding cryptocurrency trading, this idea of buying the rumor and selling the news, right? So it looks like people heard the rumor that it looked like the ETF was going to be approved, so they started buying Bitcoin. And then once it wasn't, the news was out that it had in fact been approved, they sold the news in order to take profits, which drove the price back down a bit. And then it was hanging out, it was lower. And then it was only around here, like 2 weeks later or so, late January, that we then started to see the price tracking up. And then we had a bigger spike here at the end of February. And then as we're getting into this area here, like if we're getting up to March 13th is, I think, roughly when it hit all-time highs, March 13th, March 14th. It broke its all-time highs 4 times in this period of time, and then it got up to nearly $74,000 on March 13th. And this was a huge deal in part because, so Bitcoin is like 15 and a half years old, almost-ish. It's the oldest cryptocurrency. And what we've seen in the past is that when the Bitcoin halving has happened, which is an event in which the rewards that the ecosystem generates are cut in half, that has been a catalyst for market movement. But the Bitcoin halving hadn't happened yet when this went down. The most recent Bitcoin halving, which was the fourth one in total in Bitcoin's over 15-year existence, that happened on April 20th, depending on where you live in the world, April 19th, April 20th. So the fact that it was breaking all-time highs multiple times a month before the halving happened, that's never happened before. And it was a direct result of the introduction of this Bitcoin ETF. All right. So we saw that. That's a big deal. If we go back now and look at Ether's price, this is the Ether USD graph. We can see that, all right, so we know again that the Ether ETF was approved on May 23rd, right? So if we're looking at this graph, we actually see that there was a big buy up on May 19th. So this tells me that this is another instance of that idea of buying the rumor, except that they haven't really sold the news just yet. So the price spiked and it's been hanging out up here. It's pulled back a bit, but it's been, roughly in this range between what, 36.50 up to 39.75 or so. In this, what has that been? 2.5 week period of time since this spike in price. So things are kind of hanging out. And again, the difference, a big difference in terms of the Bitcoin ETF and the Ether ETF is that trade for the Bitcoin ETF started the day after the approval, and we're still waiting for trade to start for this Ether ETF product to become available for trade on exchanges. So we need to get ready, basically. There's a likelihood that this could drive up price. The other piece of this that's significant is that this graph won't show us the data because it only goes back about a year. But look at how much has come up in that year period of time. Ether's all-time highs are around $4,800 a coin, and I believe they were hit in like November of 2021. So the best price it's hit this cycle, which notably, check this out, this was March 13th. So that's the same day that Bitcoin established its most recent all-time highs. That's the highest relatively that Ether has gotten in this cycle. It got up to not quite $4,100 a coin. So Ether still has a ways to go up and quote unquote test its previous all-time highs at $4,800 a coin or so. So we can infer from that, if it follows the path of the Bitcoin ETF at all, and there's a likelihood that it will, and certainly just the fact that more people are going to be coming into the market and buying, like that's what drives markets up, right? But this tells me like, okay, it's at 36.70 or something like that right now. So that's what, an over $1,100 increase in price before it's even testing those previous all-time highs of $4,800 a coin. And if it's like Bitcoin and it continues to break its all-time highs time and again, I mean, we could see even greater upside. So the fact that it's pulling back right now and it's been kind of hanging out and consolidating at this level, makes it look like it could be an especially opportune moment to get involved in the cryptocurrency, like for real. Um, okay, so given that, I want to talk about two different ways we can prepare, a sort of more basic way to prepare and then a more advanced way to get ready for this. So in order to talk through that, let's go back here. So if you're totally new to the world of cryptocurrency, there are a few things you can do in a short amount of time just to make sure you're getting yourself involved so that you can benefit from the potential upside with something like this, okay? The first thing to do is to get a self-custody wallet. The second thing is to open an account on a centralized exchange like the one I just showed you, Gemini. And then you can start doing what's called DCAing, dollar cost averaging or fiat cost averaging into Ether, so that it's sort of like the easiest, quote unquote, laziest way to trade. You don't have to have a good understanding of how to trade or how to approach the markets. If you're DCAing, you can just decide like, okay, I know that I have $50 a month or $100 a week or whatever it is that I can allocate into Ether, and then you can set things up so that it's automatically buying that cryptocurrency for you in that amount on at whatever time interval you prefer. So to start, let's talk about getting a self-custody wallet. This is so, so important, y'all. This is one of the most exciting and important um, like technological developments that have shown themselves through the introduction of cryptocurrency. The reason for that is that when we have a self-custody wallet, we can hold on to our money, we can retain custody of it, even as we invest it in other things to generate other types of bonuses and other types of rewards and to earn other fees. We're just used to the way banks work because that's been the way it is, our entire lives up to this point. But the thing about banks is that, when we're using them, we're giving them our money, and then they just have it in their custody and they can do whatever they want with it. And that has sometimes gone catastrophically awry in instances like the Great Depression, when the other piece of this, in case you're unaware, not to get too technical, but basically when banks take in our funds, they pay us whatever shitty interest rate they're going to pay us, and then they take our money and reinvest it somewhere else for a much better interest rate, and then they keep those profits for themselves. That's how the banking system works. And that's okay or whatever, as long as everything's functioning as intended. But because they only have a fraction of customer deposits available for withdrawal at any given time, what has happened, as with the Great Depression, is that, there have been moments where, like if we look at this real quick, this is an example of a bank run in New York in 1932. So what happened in this instance was people heard that the bank was in trouble because they were employing fractional reserve banking practices. They were reinvesting customer deposits somewhere else, but something went wrong. And so everybody and their neighbor hears about it and they're like, uh-oh, like we better go to this bank and withdraw 100% of our deposits because this bank might go under and we might lose all our money. And so then everybody would show up at once. And because the bank only had a fraction of reserves available for withdrawal, then they couldn't cover everybody's demand to, get their money back. And that would make the bank go under even more quickly. And we still see modern day versions of this, like as most recently with the Silicon Valley Bank collapse in like March of last year. But also something that like I didn't see the news media talking about at all was with FTX. If you saw this in the news, it was, oh my God, it was in the news so much and it was so annoying. But this collapse, the FTX collapse, and the fact that the founder, Sam Bankman Fried, I think he's serving like a 25-year jail sentence now, although I'm sure he's appealing. Um, this was another centralized failure. It was not cryptocurrency's fault, even though the media kind of painted it that way and scared a bunch of people away from cryptocurrency. But it was the same deal. Fractional reserve banking, they invested their funds somewhere else. Customers didn't actually have custody of their money because it was a centralized exchange. And then they couldn't cover the demand for customer withdrawals. And then they went under. And they ended up, defrauding $8 billion worth of customer deposits or something like that. So this is a problem. If we're using self-custody wallets, we get away from this because we're not giving them the custody of our funds, and therefore this can't happen, right? So the first thing you need to do to prepare is to get a self-custody wallet. So the two that we still tend to recommend most, for lack of a better option, is the Coinbase self-custody wallet. And y'all, to be clear, none of these people pay us any money, and I would not feel right like recommending something just because somebody paid us to recommend it or something like that. I think it's important, especially given the mission of Seeds, to talk about what I think are the best tools that are going to benefit you the most. So I don't like Coinbase. They treat their customers poorly, but their products are okay. And we've used this self-custody tool now for many years. It's been fine. They're continuing to improve it. So this can be an option for you. It's a mobile app. So like you could literally, like download it in whatever, less than a minute. And then you have a self-custody wallet that you can use. Excuse me. The other tool that I personally used for even longer is MetaMask. They have a Chrome like web browser plugin. They also have one for Firefox, and they have a mobile app now as well. But I mostly use the Chrome plugin, you can see here, which can make it easier to navigate trade on decentralized platforms whenever I'm like using my laptop. So here's that as well. Their product is maintained by like Ethereum's something called Consensus, as I understand, which is sort of like Ethereum's marketing arm. And I mean, it's not the best product ever, but it's been okay. It's served my needs over time. If I were aware of a better product and I try to stay up on trying, whatever products are available as soon as they come out, I would tell you all about it. And I haven't seen something that I find to be better than these, even though Uniswap introduced a wallet fairly recently. Uniswap's like the pioneering decentralized exchange, and I don't think their wallet is better. So I'm not suggesting that you use it. But the most important thing to remember with this is that it's a self-custody wallet if you are given access to the private key, the mnemonic, or the seed phrase for that wallet. If you're not being given that information, you don't have custody of your funds. So maybe you've heard the phrase like not your keys, not your crypto. That's what that's referring to. If you don't have the private key for your wallet, the funds are not in your custody. And so something can go badly whenever that happens, like we talked about with FTX, for example. There have been many centralized failures like FTX's failure, though. It seems to happen every cycle. Hopefully it'll stop happening because hopefully regulators are starting to pay attention to regulating the correct things, which hasn't been the case in the US, but hopefully that's going to change. All right, so you have a self-custody wallet, right? So the next thing we needed to do to prepare at the basic level was to set you up with an account on a centralized exchange. So like I said, I'm using Gemini Active Trader. I'll put the link in the description. I think they're the least worst. I have no love for Gemini. I think they're shitty. Um, they've treated me poorly as a customer. I'm sharing this to illustrate like how bad it is that this has been my experience, and I'm still telling you that they're probably the least worst. Just centralized cryptocurrency exchanges are not good in my experience. The incentive structure isn't great. It's just none of them treat customers well. Coinbase is notoriously bad in terms of the way they treat people. None are great. I think the Gemini is sort of the easiest interface to engage with. It's easier to see, whatever. So that's what I've used. The reason we want to get set up on a centralized exchange is because they allow us to buy cryptocurrency with fiat currency like the US dollar or the GBP or the AUD or the CAD, whatever the local currency is where we live. So that's their purpose. We have to use them for that function at this point in time. Although, if you want to, you can also choose to make a gift to someone in need through seeds. You can do that. The link is in the description, as I mentioned before. But you can help someone in need through seeds. 100% of the value of the gift will go to people who need help, and you'll receive cryptocurrency in thanks. So that's a way to feed two birds with one stone, because you're helping people and you're getting cryptocurrency, and you're doing so using fiat currency. So that's an option too. But you're probably at some point going to want to use the centralized exchange in order to trade cryptocurrency for fiat currency. So it's a good idea to have that set up so that it's ready for you. They're going to verify your ID and so forth. It can be an annoying process. Sometimes they'll delay it. So try to do this sooner rather than later. They're trying to speed these processes up. And some centralized exchanges now have been able to get that taken care of for folks within 30 minutes using automated processes. But they're going to ask for your government issued ID. So if you're fortunate enough, to have government issued ID, which some people around the world definitely don't have, some of the folks that Seeds has helped don't have government issued ID, you're going to have to use that on a centralized exchange. So we want to get you set up with that so that you have this ready to use it before things start really going crazy, which history has shown us might happen sooner than we expect. It's happened every cryptocurrency, every Bitcoin halving market cycle. And as I mentioned earlier, the most recent Bitcoin halving event was April 20th. So we've entered into a new Bitcoin halving market cycle. Okay, and then the third thing that we talked about was starting to DCA into Ether to start preparing for what may be this likelihood that it jumps up in price after the Ether ETF is launched, which again, maybe as soon as late June. I've seen like experts talk about the possibility that it could happen in late June. Someone else said that it could happen before July 4th. So we don't know exactly when that's going to happen. They're not talking about that publicly, but it could be pretty soon. So we just want to get ready. So in order to DCA into a cryptocurrency, we can do that on an exchange, a centralized exchange like Gemini. Here, I'll show you where to do it. So we're on the active trader interface here. We can go back to the simple interface, and you'll see this modal or whatever here on the right. Make a trade. And you can see here that we can set the frequency to different time intervals, twice a month, weekly, monthly, whatever. We could say weekly. You can choose the day that it happens, and then you can choose the cryptocurrency and the amount and so forth. So the thing to know about this is that these simple interfaces will charge you much more in fees than an active trader interface will. Like this active trader interface, this is like 1/10 as expensive to use. The fees are like 1/10 what they are in a simple interface. So just be aware of that. But the thing is, we can't set up DCA within this active trader interface, unfortunately. Yeah, I don't think they've. Yeah, I mean, we could do other things to automate certain types of trades. We can use something called limit orders to do that, but it's just for some reason they're not allowing us to do this yet. So we're likely going to have to use the simple interface on a platform like Gemini to do this. And yeah, you can do that. Assuming it does go up and in any way kind of tracks what Bitcoin did earlier than in the year when the Bitcoin ETF was launched, that would more than cover, the cost of these fees. But it's just annoying, and it's something to be aware of. And I should make sure to say that there are platforms like Robinhood, Current is another one, apps that make it look like they're letting you buy cryptocurrency. You can set up DCA through those apps as well. But again, if they're not giving you the private key or the mnemonic for your cryptocurrency wallet, that cryptocurrency is not actually in your custody. So we want to make sure whenever we're acquiring cryptocurrency on any centralized platform that we move it into our self-custody wallet. So again, something like Coinbase Wallet, self-custody tool, or MetaMask. We want to get it into our self-custody wallet as soon as possible because it's just a best practice not to leave cryptocurrency on a centralized platform. Okay? All right, now let's talk about a little bit more advanced approach that we can take if we want to do that. Okay, so once you have that Ether, what you can do is you can become a liquidity provider in an Ether pool with a lot of trade volume, because that's a way to put your Ether to work so that it's earning you additional fees. And because it looks like there's this likelihood that there could be a lot more trade happening in Ether with this Ether ETF launch, you could earn even more in fees as more and more people are trading it. Okay. So the way to do that is to use a decentralized platform like Uniswap. Uniswap's still the go-to. It's like the pioneering decentralized cryptocurrency exchange. It's the most popular, whatever. So we can visit this. Here's the link. I'll put this in the chat as well. And whenever we're using their platform, here we'll launch the app. And then we're going to look for a pool that has a lot of trade volume, like I said, right? So let's look at the analytics here. Oh, whoa. Check this out. Okay, yeah, just to share this because it's interesting to me at least. We can see the Uniswap TVL over here, and it's over $4 billion. Okay. TVL stands for total value locked. So that's the amount of liquidity that has been added to the platform. Y'all, this was $5 billion like Saturday, like 2 days ago, if I recall correctly. So a bunch of people have moved their money off of the platform, which is interesting. Huh. I wonder why they're doing that. I bet it has to do with the Ether ETF. That's interesting. Okay. So then what we can do is take a look at the pools down here, and we want to find a pool again that uh, includes Ether and that has a lot of trade volume, because if there's more trade volume, we're going to earn more in fees if we add our liquidity to that pool. Okay. So let's look at, here's 1 day volume. Let's look at 7 day volume. Okay, here so we can see the rankings in descending order, the pools that had the most volume over the past 7 days. USDC, USDT, USDC Ether is the #1, and we want a pool again that includes Ether in the pairing. WBTC Ether, and then next to the list of pairings, the list of cryptocurrencies in a pair, when we see this percentage, this is the fee that traders are paying to use that pool. So if we're choosing a cryptocurrency pairing with a higher fee, like here's the WBTC Ether 0.3% fee tier, then we're earning more in fees. So, it's something to consider because that pool, for example, has less volume. The USDC Ether 0.3% fee tier has less volume than is it not above there? Every other, like the top 8 we can see here are at 0.05% or 0.01%. So they're cheaper for traders to use. And so we have to consider, like, okay, does the volume seem like it offsets the fact that I'm going to be paid less in fees or not? So that's something to consider. So I'm going to say WBTC Ether. I mean, it's showing a lot of trade volume. It was over $90 million in trade volume in the last 7 days, right? So then I might select this particular pool to add liquidity. And so I'd click on add liquidity. And this is where we bring the Ether that we've been purchasing on centralized exchanges, we move it to our self-custody wallets, and we can then use our self-custody wallet to connect up here to this decentralized exchange. Again, we'll retain custody of our funds as we do this, but we can invest these funds, let traders use them essentially, and pay us fees for using them at the same time. And we can remove our liquidity whenever we feel like it, including any fees that we earn. So just to bring this home a little bit more, here is a shot of a position that I created a while ago in Ether WBTC. So check this out. This is the pool that we're looking at right now, the one I was just talking about, the Ether WBTC pool at the 0.3% fee tier. So we can see the total liquidity that I had was worth $55,000 or so at the time I took this screenshot. and I had earned $1,432.44 in fees that I had not yet claimed. And this is simply because I added liquidity. So I just had this cryptocurrency chilling in my wallet. I chose to add that liquidity to Uniswap's, to a pool on Uniswap, specifically the Ether WBTC pool. And then traders were trading in that pool, and they were using the funds that I had added, and they were paying me a fee every time they executed a trade. They were paying me a 0.3% fee. And they were also, they're paying everybody who had added liquidity to that pool in the price range at which they were trading. So this was pretty amazing, y'all. This was a return in like 10 days or something. So let's do the math on that really quickly. So 1432.44 divided by 55,009.57. That's not right. So that's like a 2.6% return in 10 days. Okay. So over the course of a year, that's around a 95% return. So that meant that I nearly, if this held up, and there are other variables that affect this, it isn't guaranteed that you would always get a return like this the whole time. But this is like a 95% annualized return, which means that I would have nearly doubled my money if this held up for a period of a year, right? So like I already have the cryptocurrency. That's great. If the cryptocurrency went up in value, I have greater profits because of that. But then on top of that, I could nearly double my money because I chose to add liquidity on Uniswap's platform, just to give you a better idea of how that works. All right. Okay, so if we're looking again at how to do this, we're choosing this pool. This is where it gets tricky, and this is why it's more advanced. I mean, this is already kind of tricky. It's difficult to explain in a short session like we have today. What we can do is we can choose different price ranges to leverage our capital. If you want to keep it simple, you can just choose full range, okay? Then it's going to add your liquidity to every possible price point that trade could happen. So you're always going to be earning fees. But what you can do if you want to be a little bit more advanced is you can choose to set a narrower price range using low price here / these like paddles or whatever down here. The pink on this terrible graph shows us where the majority of liquidity has been added, like specifically what price range that liquidity has been added. So we're only getting paid whenever people are trading at the price at which we've added liquidity, right? So like it kind of doesn't make sense to be adding liquidity all the way down here because that's so far away from the current price. This gray line here shows us like where the current, like the trade, the price at which current trade is happening, this gray line. So we might want to try and bring these paddles in closer to the gray line so that way we're leveraging our capital more effectively. What that means is like if we're choosing a narrower price range, for example, if we're adding $1,000 worth of liquidity in a narrower price range, that can earn us as much in fees as would adding $10,000 in a broader price range because Uniswap allows us to leverage our capital by choosing a narrower range. Hopefully that makes sense. You don't have to mess with that though. Like I said, you can just go with full range. That keeps things simpler because the other piece of this that's more complex is that if and when trading goes outside of the range you've established, then you're no longer earning fees. So then you have to pay to remove your liquidity. You have to pay a transaction fee, and then you have to pay again to add your liquidity back in and choose a different price range. And that can really eat into your profits quickly. So if you want to avoid that, you can just choose full range, or you can get, like try to find kind of a happy medium where you're choosing sort of a wider range, but it's around the bulk of where we're seeing, this pink graph is showing us that the liquidity has been added. The interface is bad, as you can see. Like I can't even, the other paddle has disappeared, but you can play around with it and figure out what seems to make sense for you. Experiment with it a little bit. Here. It just will not let me, just because I clicked on full range once, it like won't let me ever see that other paddle again to like adjust it. Anyway, you might have to refresh the page. Their user experience is not their strong suit. They still need to do a lot to improve that. Then it'll tell you specifically what deposit amounts you should add down here. You'll need to connect your wallet first in order to do that. And then you'll pay a fee to add that liquidity. And then it's there. And then it can just start generating fees for you. And you can remove them again at any time that you want to, although you'll have to pay a fee for that as well. So that's the more advanced option. And again, it seems to make sense to do that nowish because of this likelihood that there's going to be greater trade happening, because it looks like, this Uniswap, this Ether ETF is going to launch maybe as soon as late June. And if that happens, more trade means more people paying fees, and you can earn more in fees over that period of time. All right, y'all. I think that's all I had regarding like the basic approach and the advanced approach. So I hope that's helpful. And again, to stress this, if you're like me and you're tired of the old economic system, you're looking for ways to get out of late stage capitalism, it seems criminal that people still have to trade their time for money. I feel like so many of us are just waking up to the crushing weight on top of us. Seeds is working to transcend that. And again, that's why I talk about this at all. That's why I try to share these ideas with people so that more giving, generous people who are working to benefit the world can benefit from cryptocurrency at this time. And also on top of that, like I said, because more than 98% of funding in the old system goes to men who founded tech projects, that's made things a lot harder for Seeds. I'm the solo founder of Seeds. So I was forced to get more resourceful, and I eventually realized, like, okay, I could teach a course using my background as a pro stock trader who then started buying Bitcoin in 2013. And we could use that to help raise awareness for Seeds, to help give people more skills so that they understand how to trade, take advantage of these opportunities in the cryptocurrency sector. And we could offer Seeds with tuition when people sign up so that the course itself is free. So if you're interested in that, check it out. The link is in the description, and I'll also put it in the chat. We have 20 spots available right now. And again, when you're doing it, you're supporting a good cause because it's what sustains Seeds, and it's effectively free because you get Seeds cryptocurrency and thanks when you join. So I think it's a really good deal. There are a lot of people on YouTube who talk about cryptocurrency. I'm trying to add my voice to that. I used to use TikTok a lot last cryptocurrency market cycle, but then TikTok got, like, capitalism kind of destroyed TikTok too. And I kind of hate TikTok now. So I'm trying to be on YouTube more. But yeah, there are a lot of people obviously who talk about uh, cryptocurrency on YouTube, but I don't know anyone. Do you know anyone who's coming from the background as a pro stock trader like I am, who started buying Bitcoin in 2013, so who saw the cryptocurrency opportunity that early, who is now the founder of a cryptocurrency project like I am, who is offering a course? So I think I really have a unique perspective in that sense. And I'm really coming at it from a perspective that values and tries to uplift feminine energy. And Seeds is about imbuing a new economic ecosystem with a healthy balance of feminine and masculine energies instead of the toxic masculine energy that's so prevalent in the old system, which affects people of all genders. So Seeds is working to build a better system than that from the ground up. And that's part of what the course is doing. So check that out if it resonates. Like I said, we have 20 spots now. We're trying a different experiment to see how this can work in this period of time leading up to the Ether ETF launch, because that could happen in like 2 weeks, right? So that's there for you if you're interested. And if you're not sure if you want to do it just yet, you can also just click the link to receive notification before it closes. So that's there as well. All right, y'all. It doesn't look like there are any questions or anything from folks here live. So I guess that's all I got. Thank you so much for your time and attention. I appreciate you very much. And yeah, please like and subscribe if this resonates. I'm going to start going live more often to talk about moments where I really see an opportunity, like now, like with this Ether ETF upcoming launch. So I can share that information with folks. And yeah, and I'm posting fairly regularly. I'm trying to get a video out at least once a week, like a scripted video or whatever, where I'm talking about different aspects of the cryptocurrency world and my thoughts on transcending capitalism and the spiritual elements of this as well, because I also think we're at this interesting juncture where the rise of the feminine is happening, ascension of 5D is happening, and the astrology is also really interesting as it relates to what's going on in crypto. So I'm bringing in that perspective too, if that resonates with you. Okay, I'll let y'all go. Have a wonderful evening wherever you are, and I'll catch you next time. Take care. Bye.